Most traders lose money with the DeMarker indicator, not because DeMarker is bad, but because they use it in the wrong way. They treat it like a reversal tool and keep trying to sell the top or buy the bottom. And in strong markets, that mindset is exactly what causes losses. In this video, I'm going to show you a simple pocket option strategy designed for 15-second candles with 1-minute expiry. This strategy does not predict reversals, and it does not chase random signals. Instead, it focuses on one powerful idea: buying and selling pressure. When pressure stays strong, the market usually continues, and that continuation is what we want to trade. So make sure you watch this video till the end, because the entry timing rule is the most important part, and it's where most traders fail. Once you understand this logic, you'll never look at the DeMarker indicator the same way again. Before we continue, a quick reminder: this video is for educational purposes only. I'm not giving financial advice, and no strategy guarantees profit. Binary options involve risk, so always practice on a demo account and never trade money you can't afford to lose. Now let's talk about the common mistake. Most traders are taught that when DeMarker goes above 0.70, you should sell, and when it goes below 0.30, you should buy. But this approach breaks down in strong markets because indicators don't reverse immediately. When a trend is healthy, pressure stays active. That's why this strategy works differently. We are not guessing tops and bottoms. We are trading pressure persistence. When DeMarker stays above 0.60, it means buyers are still in control. They are not exiting, and they are not taking profit yet. And when DeMarker stays below 0.40, it means sellers are still dominating the market. So instead of fighting the move, we simply join the side that already has control. This strategy is designed for 15-second candles with 1-minute expiry, because in short-term binary trading, continuation moves are far more reliable than reversals. We're not trying to be smart, we're trying to be aligned. Now here's the most important rule, and this is where most traders lose. We do not enter on the first touch of 0.60 or 0.40. One candle can be noise, 2 candles can be hesitation, but 3 candles holding the level shows commitment. Institutions don't enter and exit in one candle, they hold pressure, and DeMarker shows that holding behavior clearly. Now let me show you how this looks on a real chart with a buy example. On this chart, notice how DeMarker moves above the 0.60 level. The key thing to watch is that it does not fall back below. The first candle closes with DeMarker above 0.60, the second candle also holds above 0.60, and now the third candle confirms that buyers are still in control. During these candles, price is moving upward with mostly bullish candles and no strong bearish rejection. After the third candle, I do not enter immediately. I wait for the next bullish candle to close. As soon as that candle closes bullish, I enter a buy trade with a 1-minute expiry. This entry is not based on hope. It's based on confirmed buying pressure holding in the market. Now let's look at a sell example. In this case, DeMarker drops below the 0.40 level and stays there. The first candle closes below 0.40, the second candle also holds below, and the third candle confirms that selling pressure is still active. Price candles during this period are mostly bearish, with clean bodies and no long lower wicks, showing that sellers are in control. After the third candle completes, I wait for the next bearish candle to close. Once that candle closes bearish, I enter a sell trade with a 1-minute expiry. Again, I'm not predicting a reversal, I'm simply following sustained selling pressure. One very important reminder: this strategy is not meant for sideways markets. It doesn't work well when candles are choppy, when DeMarker keeps jumping up and down, or during high-impact news. We only trade when the market is clean, directional, and controlled. To make this strategy easy to follow, I've created a free step-by-step checklist, PDF, that explains all the rules clearly. You can download it from my Telegram channel. The link is available in the video description. Now, let's continue on the chart and break this down step by step again so you can clearly see how to identify the pressure hold, how to wait patiently, and how to avoid the common mistakes that most traders make. Now let me explain why I took this buy trade. First, look at the overall structure of the market. Price is clearly moving upward with higher highs and higher lows. There is no sideways chop and no sudden rejection candles. This tells me the market is already in a controlled bullish flow. Now focus on the DeMarker indicator at the bottom. DeMarker is holding above the 0.60 level, and this is the key point. It is not just touching 0.60 and coming back down. It stays above that level for multiple candles, which tells me that buyers are still active and there is no sign of profit taking yet. During this hold, the price candles remain mostly bullish with clean bodies and very small lower wicks. That confirms buyers are in control, not just on the indicator, but also in real price action. After seeing DeMarker hold above 0.60 and confirming 3 clean candles, I wait patiently. I do not rush the entry. When the next bullish candle closes, that is my confirmation. Only after that candle closes bullish do I enter the buy trade with a 1-minute expiry. This entry is not based on prediction. It is based on confirmed buying pressure. The most important thing I watch during the trade is whether the market structure stays intact. As long as price continues to print bullish or neutral candles and does not show a strong bearish engulf or long rejection wick, the buying pressure is still valid. At the same time, DeMarker remains stable above the 0.60 zone. Even if it flattens slightly, the key thing is that it does not drop sharply back below the level. That tells me buyers are still holding their positions. As you can see, the trade finishes in profit, and the reason is simple. Buying pressure never disappeared. Now let me explain why this buy trade was taken. First, look at the overall price structure. After a clear bearish move earlier, the market stopped making lower lows and started forming a base. That tells me selling pressure is slowing down and buyers are beginning to step in. Next, notice how price breaks out from that base with a strong bullish candle. This is important because it shows real participation, not just a random spike. The candles are clean, bodies are strong, and there are no long upper rejection wicks, all signs of controlled buying. Now look at the DeMarker indicator. It is holding above the key buy pressure zone, showing that buyers are not exiting immediately. This confirms that the bullish move is supported by pressure, not just momentum. I wait for confirmation, not excitement. After the bullish candle closes and the pressure holds, I enter the buy trade with a 1-minute expiry. This entry is based on structure, pressure, and confirmation, not prediction. During the trade, price continues to move upward with mostly bullish candles. Even when a small red candle appears, it does not break the structure or show strong rejection. That tells me buyers are still in control. At the same time, DeMarker remains stable and does not drop sharply. This stability is important because sudden drops in the indicator often signal profit-taking or weakening pressure. That does not happen here. As you can see, the trade finishes in profit, and the reason is very simple. Buying pressure stayed active until expiry. If you want to learn how to read pressure clearly, avoid emotional entries, and trade with structure instead of guesswork, make sure you follow this channel and stay till the end. I'll continue breaking down real trades step by step so you can focus on logic, not hype. Now let me explain why this sell trade was taken. First, look at the overall market structure. Price was previously making higher highs, but that momentum clearly started to weaken. Instead of continuing upward, the market began forming lower highs, which is the first warning sign that buyers are losing control. Then notice the candles just before the entry. We see a strong bearish move, followed by small pullback candles that fail to push price back up. This tells me sellers are stepping in aggressively, and buyers are unable to regain dominance. Now focus on the DeMarker indicator. DeMarker moves below the 0.40 level and stays there, showing sustained selling pressure. It is not a quick dip. It holds below the level, confirming that sellers are not exiting yet. After this confirmation, I wait patiently. I do not enter on the first drop. When the next bearish candle closes cleanly in the direction of the move, I enter the sell trade with a 1-minute expiry. During the trade, price continues to print bearish candles with strong bodies. Even when a small bullish candle appears, it fails to break the structure or create a strong rejection. That tells me sellers are still in control. At the same time, DeMarker remains weak and does not bounce back above the key level. This is important because a sudden spike upward would suggest profit-taking or loss of pressure. That does not happen here. As you can see, the trade finishes in profit. And again, the reason is very simple. Selling pressure stayed active until expiry. Here I took a buy trade after the DeMarker indicator crossed above the 60 level, which usually signals bullish strength. At first glance, the market looked supportive because price had already moved upward and DeMarker was holding above the bullish zone. However, this was not an ideal setup. Right after DeMarker crossed 60, the market started printing multiple doji candles, and the last 6 candles moved almost in a straight horizontal line. This tells us something very important. Momentum had already slowed down, even though the indicator still looked bullish. This trade was taken purely for learning and demonstration purposes, not as a recommended entry. Now watch this part carefully. because this is where most traders get trapped. Even though DeMarker stayed above 60, price stopped making higher highs. Instead of strong bullish candles, we saw small-bodied candles and repeated doji formations, all closing at nearly the same price level. This is the market's way of saying, buyers are no longer aggressive. When multiple candles form in one straight line after a momentum move, it usually means institutional traders are not pushing price further. They are either booking profits or waiting, while retail traders continue buying late. At this stage, the indicator still looks strong, but price action has already lost energy. That mismatch between indicator strength and price behavior is a clear warning sign. This is why we always say, indicator gives permission, but price gives confirmation. As expected, this trade ended in a loss, not because the strategy failed, but because the entry was late and taken during price compression after momentum exhaustion. A good strategy doesn't mean every trade wins. It means you know exactly why a trade wins or loses. This is why I always show both winning and losing trades, because real trading is about understanding when not to trade, not just when to click buy. So remember, indicators show direction, but price action shows truth. Today's example proves why patience matters more than prediction. If this breakdown helped you understand the market better, hit the like button, subscribe for more real trade analysis, and I'll see you in the next video.